Welcome, everybody. I am one of your hosts, Charles Moon, the disciple of trend on Twitter, for the podcast Dips to Rips with the great and legendary Howard Greenberg of the Crypto Crew. How are you doing today, sir?
I'm fantastic. How are you doing today, Charlie?
Man, doing good. Not markets withstanding, of course. We're just going to dive right into it. You know, one of the biggest, one of the biggest, how do we say, fallout events that has
Failures.
taken. What would you, Howard?
It was a technological failure.
Yeah. Okay.
Yeah,
So
I mean-
a failure of Armageddon proportions, in a sense.
Yeah.
We're going to talk about Luna. We're going to talk about Terra and Luna, the depegging of the stable coin, kind of how it all broke down, the rumors, etc. I've read up on it. Howard and I have talked a lot about it, and there's subsequent fallouts in that sense. But let's just break it down, because I know there's people that may have heard of it, that have done some research on it. Let's break it down in the words from a true expert like yourself. Now, one of the things that really stood out to me was when you told me that this was a top 10 coin doing something unprecedented, right? We're talking about billions of dollars being wiped. And respectfully, it took about a week from the start, but it all happened
48 hours. 48 hours.
Period of time. Yeah. And this is when we saw that liquidation. And I want to kind of go through the process of how it happened. Like, in essence, this really started not with Luna, but with Terra or UST. And it ended up becoming a situation because of how the algorithm and the ecosphere of the stablecoin was built out, that Luna had to basically cannibalize itself to try and prop UST. Is that correct?
Yes. So a few things happen, and you got to go a little bit further out.
Sure.
So you have about 3 or 4 major players within this space, and forget the rumors about who did this or anything else. It doesn't really matter. Whether it was one entity or 10 entities working together, or it was just a confluence of events that led to it. The bottom line is you have Anchor Protocol. Anchor Protocol was a place where you could stake the stable coin UST, or what was supposed to be a stable coin, UST, which was an algorithmic stable coin produced through the Luna and Terra ecosystem. And the problem is Anchor was almost everything that was the Terra ecosystem.
You're right.
So there are probably, they claim that there's 100 other platforms working. I don't think it's that high personally, but the bottom line is that, 98% of all of the liquidity was being done through Anchor with this, yield 18% that wasn't sustainable. A lot of us knew it wasn't sustainable. None of us, I don't think, thought it would crash and burn as quickly as it did. I was of the opinion we would just keep on seeing the APY continue to go down and down. And as that did, you would lose people over time. And that would just sort of play itself out, and it would just lose its luster.
Right.
But that isn't what happened. And you had a few things go on that are a perfect storm. You can't discuss it without talking about Do Kwon, the founder of Luna, who, people, very divisive to say the least. And one of the things that came out of this that I did not like in general, I don't like any parts of it. People lost billions of dollars.
Right.
It was, $40 billion that were erased in a matter of days. 40 billion. Think about that. 40 billion. They had it was ridiculous what happened. And, you had, they showed a company that was one of the validators that went from $1 billion with a B down to $2 million.
That's right. That's right. You had shared that article with me.
ESVR, I believe was the name of the validator. So just think about that. That's just, terrible. People lost everything. So it is terrible. But Do Kwon has a lot of people that don't like him. He was very arrogant. I mean, he's got a
Extremely.
couple of $10 million bets out there with some famous, YouTube influencers over what the price of Luna would be in March of 2023. Where they said it wouldn't be at 88. He bet them that it will. It obviously will not. It doesn't even matter. The bet is basically already been lost because of the debasement that happened in the printing, and now they're going to fork over to a different chain. But basically, as you said, what started to happen was on Saturday last week. So a week ago Saturday, not this past Saturday, we first saw its first break as a large amount of UST, the stable coin that was staked on Anchor, was pulled off and quickly sold.
Yes.
So when you sell UST, you give them one UST and you receive $1 worth of Luna.
Right.
So what happened was that started, along with the market already being weak, a cascade of events. And as these people kept on selling out their UST, they were doing it at a rate that was printing more and more Luna, which means you pay out the next person, you got to print more and more Luna.
Right.
To pay out the next person, you have to pay more. So for every dollar it keeps going down, more that you have to do is what that spiral they were talking about. You top it off with the confluence that had happened with Bitcoin because they owned, $3 billion worth of Bitcoin.
Okay, so let's talk about that really quick, because this is where I kind of got into that self-cannibalization. So for people that don't know, the depegging of the UST was really the loss of the dollar mark and the breakdown. So in order to keep that afloat, to keep the balance going on, Luna has to mint more Luna, right? And in turn, we have to burn UST. The reserves that you're talking about, and this is kind of the chain of events that Howard kind of led to, it really affected not just Luna, but it affected BTC itself, because to try and save Luna, to try and save the peg, they had to basically dump BTC on the market, right? The $3 billion plus in reserve.
Yeah, they had 8,000 Bitcoin, I believe. And that Bitcoin was thought to help hold that peg, that value, to give exactly for this case, to buy UST when it was needed and burn it to get rid of that peg.
Right.
To keep the peg funded.
Right.
And
so the
part
idea
of the problem is that when they announced that, it let it be known that there was this issue. So there are talks that this was a coordinated attack. Some talks about Citadel and BlackRock who have refuted that. Going to tell anybody anyways, to put it off, and it would be just as easy for some crypto native funds to do that. Like I said, Do Kwon was not a favorite of anybody, especially in the Bitcoin community, especially a lot of the whales. So could absolutely have been coordinated to that extent. And it doesn't really matter if it was or wasn't. Many people had started to point out that it was a house of cards. No one realized, I don't think, or not many realized, the house of cards was on fire. You know what I mean? That's what they didn't realize. Right. And when it went quick. I mean, I know, I do that Tuesday foundation room here at Prosper. And last Tuesday, when it was at 93 cents, I warned everybody that they needed to get out of anything with UST. Within 24 hours, it was trading at like 30 cents.
Yeah. And our last podcast, which was just a week ago, we were just talking about, the idea of staking and where staking protocols are. And, this is, it's pretty shocking because this is one of the most staked coins. And the problem is that certain brokerages or certain stakes have a pretty set lockup period, like the 28-day lockup period. So the people that were caught there lost it all. Like, there's no choice. I mean,
so Anchor didn't have that, and that's the majority of it was.
Right.
The lockup periods more were, and I don't know if any were still in place or how many were in place, would have been their VC companies. or validators that had to lock
Sure.
up a certain amount.
That probably, I mean, two of my friends got caught.
To continue to, to be validators and to get the rewards. And then hedge funds, things like that were early buyers that might have a vesting schedule. But yeah, I mean, any way you look at it, definitely a disaster. It just shows that, if it's too good to be true, it is too good to be true. Some of the signs that, and here's what happened is, quite honestly, you never really, anytime somebody brought up an issue legitimately to, Do Kwon, whether it was CoinDesk or whomever, he would attack, and he would get what we call the lunatics, the, admin community that is Luna.
Yeah, the Luna and the Terra fanatics.
They would go after people and attack them.
That's social media.
So it really obfuscated some of the facts and hid, because you just started to avoid it, because then it was just FUD versus FUD versus FUD. Who's lying, who's not. And again, like I said, I know some people might have ignored all of it, to where I was oblivious to a point, was how quickly it would implode. And, once I saw that first crack, though, on that Saturday, that Monday, when it was still trading up, close to at its peg, we got out of there quickly.
Right. So, that's the thing. That's also the difference between people who study and really respect and understand what blockchain theory and crypto theory, and I mean, let's not even say theory, but the ideology of blockchain and the advent and purposeness of crypto. But more importantly, those that are active traders, participants, and investors, they actually were pretty keyed in, and a lot of them were able to pull their money. The problem with what's happening, and we'll get that into a second in terms of the dynamics of both the crypto market and the stock market, is that people are way too comfortable buying it at peak value and trying to set it and forget it. And, we've seen a history, maybe not of top 10 coins, but we've seen a history of coins. When they start cracking, they don't really just slow down. A lot of these pullbacks are very significant. And, we always hear the terminology, winter is coming. We hear the non-believers of crypto with the I told you so's. You talk about FUD. I mean, the FUD, which is fear, uncertainty, and doubt, that translates respectfully all the way across the board, not just with, crypto, but it's really very prominent in stocks right now. And so, one of the things I guess we have to say is, how does a top 10 market cap, coin, and respectfully,
the thing we should have noticed that, to be honest, I'll be very honest, that I was almost pointing out as a bonus or a benefit to why Anchor was something so good to invest in, was look at how big of the market cap of Luna is invested into this protocol. It means it is the biggest, best, baddest. Right. Guess what? Right. It also means that the systematic risk put there by it was too much.
You're right.
That is one part that you don't see any, and there isn't really many others. I mean, you get the meme coin part of it. Then you get the people who are still buying it now.
I see people posting, I have 160 million Luna. What next?
It can go to this, it can go to that. And it's just, all you're doing again is bailing out those venture capitalists, the whole fork that, Do Kwon's trying to push through, that's being voted on for the next 7 days. I mean, I am voting against it personally. Right. Is, basically, in my opinion, just an attempt to get his liquidity folks out of, add liquidity to it so they can get out.
You're right. You're right. Because there's big money barking about where is my money.
Invent a new token that really has no value. Say it's worth whatever value it is. You have your idiot followers that are going to back it anyways. It will pump a little bit and they will dump the living out of it as soon as they can.
They need it because they're the liquidity.
The value, right? He wants to do whatever he can. Lawsuits coming. First one already, I heard, was filed in South Korea already.
Do you think he's going to be able to be held liable though?
I don't know. I don't know enough about the ongoings of it. Some of the questions are about what happened to those funds. From the the Luna Guard, the Luna Foundation Guard.
Right.
I mean, let's put it this way. He was already under subpoena by the SEC. So he already.
I didn't know that.
Oh, yeah. He got served. It was a big deal. He got served at Masari's conference last year. And it was a big deal. It was all, people attacked the SEC for it the way they did it, which was bad. But yeah, he had already done that and tried to get it squelched by saying he was a Korean, citizen and operated a Singaporean company.
Right.
But the judge in New York threw it out.
You have no jurisdiction here, SEC.
You still have to. Luna was sold to U.S. citizens, and you need to come talk to us.
So, just to kind of talk about Do Kwon, a lot of information came out after the fact, and certainly it's not surprising that, with social media, when projects fail, people tend to kind of say, I told you so, beat their chest. But, Do Kwon apparently had another stablecoin project crash on him like this before.
Basis cash.
And, what else is horrible is his perception and his attitude. He loved to say, I hope you're happy staying poor to a lot of people. Yeah. That was like his number one response, which, in itself, you hear a lot. You hear it a lot in both of our industries. But, talking about karma biting you in the tuchus in such a way.
He is not a liked man. That doesn't help with any of it. It's the Elon, you love him or hate him. Yeah. It's whoever you want to look at with that. That's still it for sure.
And unfortunately, this only kind of helps those I told you so's that already are kind of pumping up their own propaganda as to why, crypto and even stocks in some sense, they just say it's just not like there's so many Tesla, what we call Tesla Qs out there, anti-Elon, anti-Tesla, looking to short it to zero, out there. And those pundits come running out when anything happens. Obviously, anything negative happens. And now we're seeing that a lot in crypto. And so that's kind of where we're going to have to say, what is the fallout? The fallout so far, it seems, is that we're seeing other coordinated attacks, or maybe not to the same degree, but we're starting to see other quote unquote stable DPEG. We're seeing outflows. Maybe it was an outflow. You and I had that discussion about Tether, but we're seeing a lot more noise around this, right? We're seeing a lot more panic in a sense where people are pulling money, or they're generally trying to take positions hoping for a collapse, trying to capitalize on a collapse. And that's where the fallout of Luna's been. And then we talk about the negative stigma. How long will it take for this to kind of wash off? Because I don't know about you, Howard, I'm sure you know a ton, but I had a lot of friends that were really affected by Luna, some lesser than others, but I've had a few friends, two of them most specifically, that had Luna as their third biggest holding behind BTC and Ethereum. And
I didn't have as many people that had that. They had exposure. I had exposure a little bit, but
you're very diversified though.
And I was in it at prices that even when I got out, it was still at very much big gains. A couple of things are, people got hurt. As for the stablecoin thing, algorithmic stablecoins are dead. Even DAI, which is not algorithmic, which is over collateralized, has seen about 30% of its value go down. Tether saw a reduction, but I think that Tether saw a reduction because the market's risk off. The first thing they sell is crypto. So if you are the same person that owns ARK and owns Tesla, owns Bitcoin, and the first thing they sell when all three of those are in the absolute toilet is their Bitcoin, because it's the most liquid. It's 24/7 liquid, easy to do.
Right.
So that's where you're seeing those stable coins come out. There is also a flight out of DeFi right now as people take a step back to make sure that all these things do make sense. No one wants to own the next UST that goes to zero. But Tether is sort of depegging, overblown. Its outflows, while it had outflows, USDC, which is Circle's product, along with Paxos's products, they make Gemini dollar, Binance dollar, and their own Paxos dollar. All of those saw inflows during this period. Bitcoin saw its biggest inflow since 2020. In any given week, last week as it hit down. So there's demand. What you're seeing now is that extreme value at that 25, 26 level, as I've talked about, which is where you get, realized value comes in around 22 to 24, 200 week moving average right around 23K. As I've mentioned, I do think we are going to, what we just saw was a little bit of a bull trap. I mentioned that when it started to go up last week to you guys, that we were going to continue to go down.
You did. You did. On the last podcast, you warned about that.
Yeah, and we're not done. We might go back above 30 right now is what we're sort of fighting with. But we, in my opinion, will go down to 27 again. A few times, I think, as I pointed out to you a little earlier, it's very similar and set up to what we saw last June. And we went about a month or so in the down frame that would be about what we're seeing right now, that would put us through, the middle of June. I think I showed you, right? Middle to end of June, going into even July 4th might be before we start to see us take back off, where we have enough time down at that 26, 20, and that only had us down like at 26K. But at that level, and staying at that level for an extended period gives everybody that wants to fill their bags their chance to do that.
Yeah. So, okay. The cardinal rule. So I guess I got to ask, because my experience in crypto is pretty limited, right? In comparison to yours. Now, I've been familiar with crypto for quite some time, but I've never really studied it. I've never really looked into it until recent. The saying goes in the markets, when it starts to get really ugly, that's when you're supposed to start buying for the longer run in the bigger picture, right? And the markets have yet to see capitulation. You've mentioned capitulation.
Well, last Wednesday, last Thursday, when with the bottom of that fallout, we actually saw that that big sort of cycle wipe out. We went from 32 billion in open interest back down to 27, which is towards the lower side. So no, we actually saw a little bit of that flush that I was looking for. The thing is that flush doesn't go directly to the turnaround. That flush is
agreed.
So that's what we just hit. We just hit, in my opinion, the flush that starts the last capitulation. In this capitulation, what will happen is, again, you're going to have, we just had a little bit of a bull trap. I actually know some pretty smart traders that, when we got back over 30, we were like, oh, it's the bottom's in, and they bought, and my thing has been under 30 is a value. Under 28 is really where I'm focused on right now for it, and that's what we're gonna hit here. But yeah, it's always when everybody else is scared, you want to be hungry, and then you want to sell the other way out.
Yeah, if I could just kind of break that down, it's funny. It seems like the stock market and the crypto world are the only places where people are seriously scared to buy at a discount. People, when you go shopping for a car, you're always looking for a discount. Buying a home, you're trying to get it under market value. You want to buy clothes, you buy them on sale. But when it comes to the stock market, people would rather buy peaks than buy the dips. And I think that mentality, for some reason, the successful people understand that and don't look at it in that fashion. They don't like buying in at peaks. They would much rather buy value. They're thirsting. They're hungry. This is what they're waiting for. And I encourage you folks that are listening, if you've had fear, if you've had concerns, respectfully, if it's gone up to that level at one point in time and nothing's really changed, right? Honestly, nothing's really changed about the stock market. We're saying, oh, the inflation is coming, recession is coming. Well, if we're going to tie both of those factors into both markets, which for some reason it seems to be married in some fashion, right? What I want to say to you is, why do you think we have inflation? Because we printed up a bunch of money. That's partly it, right? But what has really amplified our CPI data in the stock market, for example, and in our everyday economy? Supply chain issues. What is that a derivative of? COVID outbreak in China. Well, what happens if they stem that and production gets back online? Are we still going to have supply chain issues? Okay, war. It's playing with energy right now. Energy rising is going to affect everything in our daily lives. That's the biggest concern. Well, if conflict ends, right, and war ends, is crude going to remain at these price levels? Is natural gas going to remain at these price levels? Or are we going to see it tumbling down? And then once again, we're back to our normal economy. It's been stated by economists, by the FOMC, that our economy is strong right now. Through all of this, it is still strong. Consumer sentiment remains strong. Now, I know that once consumer sentiment really starts to slip, that's where I feel capitulation in the stock market is happening. A lot of people have thrown the word capitulation when it comes to the stock market. Today, holy hell, what? NASDAQ was down nearly 5% today, but it was very normal. There wasn't panic.
It wasn't. I didn't go one time. Remember, I was sharing those figures with you guys today. You look at the numbers. NASDAQ is down now more than what the 2008 crash brought, more than what, everything. It's just.
Yeah, but how much higher than we were?
Well, that's the whole thing. That's it. Yeah. I mean,
if we pull up the deck right now, right, from where we were at the peak to where we dropped in COVID and then we rallied to, we're not even close. I just want to remind everybody, we're not even close to where that peak range was when we first fell off from COVID. So we had run up so much from the lows of 2020 all the way up until, respectfully, the SPY, I believe, made their all-time high in the second trading day of 2022 this year, right? NASDAQ high was in December. So basically from 2020 up until that moment, we're pretty much straight line up. Yeah. Nobody was then. Everybody was enjoying their gains. And so the higher you go, the bigger the drop is. If we think about it, if we labeled even just 5 years ago that the Dow was down 1,000 points, this would be splattered everywhere, not on just financial networks. We're talking about it'd be the front page story of every local, every national news broadcast out there. A flip of the coin now. It really is. It's a small drop in the bucket. Respectfully, I still think we have a lot more to go on the downside.
What do you think on QQQ? Are you looking at this drop all the way to 178 that I see?
I don't think it's that deep.
For March of 2020.
So the number for me is the SPY. You pointed out the 200-week average on Bitcoin. The 200-week average on the SPY is at 347. So I've been telling clients that we're probably going to see 350. Ooh, I just saw a bunch of stocks pop right now. I'm thinking 350 by the end of the month. The question is, do we hold 350? If we break 350, that brings us down to around 330 in the SPY, which so happens to be the peak in January before the market fell before COVID. I understand that a lot of growth names are going down in a rising interest rate environment. That's a similar thing. But just like how you're looking at that 200-week average on BTC at that 23,000, 24,000 range, I think you were saying 23,000. I'm looking at it 350 on the SPY for now. With the NASDAQ, I really am not sure. And I know that sounds kind of bad to say, but the 260 mark is where that 200-day or 200-week simple moving averages. That also happens to tie in with a major spike low of September 2020. That was right before the election madness. And then the markets went into the boom show shortly after. So this is, in my opinion, the focal point that we're probably going to see this market go down to. Again, I think that capitulation moment comes in around that consumer sentiment report. It may even come in at the end of this week, Howard, because that 385 level, the SPY bounced at just recently, the major swing low, that's that threshold of bear territory. That's that 20% mark off their all-time high. So we break through that level. We're basically accepted into bear territory. And then 350, here we come. And then it's like a wait and see. And then we'll kind of figure it out from there. This is one of the things that I'm worried about, is that people were too confident. I myself was extremely confident in thinking that we're going to bounce back in January, bounce back in February. We've seen this before. We bounced back strong. And then I noticed we weren't bouncing. And so, that's really when I started really cutting off my aggressiveness to the buy side. And I was just kind of like, well, let's wait and see what happens. And then we spilled. And then we had, unfortunately, I was on vacation, but we had a 9 out of a 10-day bull rally. And I came back, I'm like, oh, maybe we're back to normal. We're above the 50 SMA. We're above the 20 SMA in the markets. We're really not that far from where we dropped from. Actually, I think we recovered higher than where we started falling out from, only to be led to another significant drop to a lower low, which is where we're at right now. And so, right, we look at the dynamics of waves, right? The ebbs and flows of a trend. There's still room to go. This is just the start of a reversal of a trend. And this is really a reversal of a significant trend that's been pretty prominent since 2020. And if we actually pull it up on a decade chart, there's only been few moments where the market has behaved like this since 2008, quite honestly. There was COVID, which was the most severe. It was the end of 2015. That's when crude was trading at $130 and the collapse of crude all the way down to $40 in a month and a half. That led to margin calls. That led to a lot of liquidations. The start of 2016 was a lock limit, which means the market was halted to the downside. We actually ended up on the opening day or the second day of the year, opening the markets about a half hour after it was supposed to open, which is traditionally 8:30 Central Time. So, and outside of that, it was 2008. I don't think this is like 2015, because 2015 was pretty much straight lined. This is certainly nothing like COVID, the COVID crash of 2020. If I was to say what I'm seeing right now, our markets are
like we had a drop on September 2018 till December 2018.
Wait, say that again?
SPY looks like it took a dump in 2018 in between September and December, from a high of about 292 back down to about 235.
Yeah, so a lot of that was, so part of that in that time frame, right, when we saw pretty significant weakness, right? If we're going to go back to that time of 2018, maybe from, it looks like October down, that was actually when Trump took office. That was the trade war with China. Do you remember the trade war issue with China? That was also when Fed Powell and the FOMC gang wanted to start hiking rates then. And remember, like they were kind of bantering it back and forth. The Fed decided to step back. That's why the market started mooning up until 2019 and into the beginning of 2020. And then, of course, COVID happened. Trump was on Powell's case. You got to help the markets. You got to help the markets. He didn't believe that COVID was going to be a big issue, and it certainly was. But, that dynamic, that drop, that wasn't anything in comparison to what we've seen because of the velocity and the amount. Remember what you had pointed out earlier, right? The amount. So if we equate, that data to this data,
and the volume is not anywhere near. The volume those days was just so much higher.
I really believe that this is going to be similar to 2008, but just not as severe, meaning we're not going to see an 80%, 60% liquidation. 30%, I think, is probably the bottom line, but I'm not a mind reader in any sense of the in that nature. I don't know. I'm only anticipating that the markets are going to try and find a floor, because Lord knows that if we don't hold at these levels, the 200 SMA on the weekly chart.
Oh man.
I mean, it's the same thing with BTC.
I was just looking at put spreads based on what you said just with 350.
Yeah. Think about what happens with BTC if they lose. How far can they go down?
Oh yeah. Yeah. Oh yeah. I heard someone today say 17. Made me spit out my Cheerios.
For me, I feel like that's ridiculous.
I don't see it. But
I don't see it in our market.
Every downsayer is going to come out of the woodwork now. Peter Schiff can't get to his keyboard quick enough.
Oh yeah. How's gold doing? Oh, it's down too.
Either. Yeah, not very well.
Listen, we could say all that we want. Regardless, the market sentiment right now, the buyers don't want to hold long, right? They try to do
Herein
that.
Greed's at an 8, my friend. An 8. That's 8 out of 100. 0.8. That's like the lowest it can go.
I mean, I see how the market sentiment is right now. And I see the most shocking thing that I got to point out in our coaches chat. Scott said we may see record volume today in the queues for options.
Yeah.
And I pointed out exactly for the underlying. I said, well, we're way below average. So we ended up trading 3 million below the 30-day average in total volume today for the Qs, with record volume in the options market.
All right. So you're saying the spot. Yeah. Well, that's the problem we're having in crypto too, is everything's being led by the directive. The retail investor, the advent of what we've seen is that, and you have it, how many people in your room are using your info to buy options?
I mean,
they're buying derivatives as opposed to buying, and they're never executing those. They're buying and selling, contracts.
Synthetics. It's all fake.
Yeah. So that's what's eating up, spot volume. I mean, that's I couldn't disagree with
it does affect pricing. It affects
anymore that we don't need him in the CFTC. We don't need FTX to get the rights to do leverage derivative trading here in the US. We don't need it. It should be wiped out everywhere, or at least put into the same ratios that the regular, that I get out of TD or you get out of TD.
Right.
2.5, maybe 3 to 1, not 20 to 1, not 100 to 1, not 1,000 to 1.
Oh, speaking of which,
no need. And that derivative market now is so much larger than the spot market, which is a problem because it's the individual retail traders, and 9 out of 10 of them lose in that game, first of all. And second of all, those people should be buying the underlying spot asset. And then they would actually have something at the end of the day if they were buying Bitcoin instead of contracts.
So it's funny you mentioned that leverage thing. Did I share you the story about the guy that killed it shorting Luna with $300?
No.
He had 300. He had 100 to 1. He did it at peak, and I think he turned $300 into $60,000 in a week, or something, or a week and a half.
More than that, but yeah, I mean,
because he didn't cash when it was sub penny. He cashed at like $3 or something like that.
Well, it was just, again, if he did $300 and he did 100 times leverage, means he had the equivalent of $30,000, right?
Yeah, hold on. Let me find that story.
30,000 shorted from.
It may have been $600,000
from 80 to. I mean, just think. Yeah, I mean, it's crazy. I mean, whoever shorted it absolutely made billions.
At the very least, right? Shorted Luna with.
No, you've been asking me how to short that USDD. I think it might be Tron. So maybe that's the way to go. I never liked them anyway. So
remember we talked about that USDD potentially being potentially looking to be attacked, right?
Well, not being attacked, it's the same thing. It's based on UST to my knowledge. I mean,
hold on, I gotta find this. I'll send it out to you at some point. I just remember seeing this, and the guy was just like, "This is why he did it," and and it's funny because there's other clips too. I'm a poker fanatic. There's a poker player that plays in a poker stream at the Hustler Casino, which has been gaining a big follower, not just because it's Hustler Casino, but a lot of the top, you would say the whales in poker, the high stakes players, they've been playing there. So these guys sit with $50,000 to like $100,000. And one of the guys sat down. He's actually a well-known crypto trader and investor. And he was saying throughout the stream, he's like, I'm shorting Luna. And he started breaking it down. And one of the players like, I got a lot of Luna. He's like, what? I'm up a ton. Why are you telling me that I need to let it go? And he kind of broke it down to him like on stream just briefly. And he's like, I'm short with 40,000. And this video, this clip started going viral on Twitter because this guy was building up his position probably about a month before the crash. And he says, I'm just going to keep
there were some people that pointed it out. Corey Clipstein, who is a Bitcoin maximalist anyways. So that's what's tough. The problem is that a lot of people that were pointing it out were the Bitcoin maximalists. And, they crap on everything, including Ethereum.
Right.
And like I said, the other part, the last thing I know, we're running short on time here, is that we, the other thing that was bad was all the infighting. So you had Bitcoin maximalists who couldn't wait to watch this. I saw one more person putting, getting my popcorn ready to watch this, this thing play out, to the Ethereum maximalists saying, that's why every other coin except for Ethereum is crap, to the Solana people saying that's why that's crap. Everybody was fighting with each other, pointing out Solana, went offline during this time frame too again for like 8 hours. So that's not good. Cardano people getting involved. I had a laugh because they've got an algorithmic stablecoin CJED coming out from Cody that they're all happy about and using this as a reason because theirs is better. It's not perfect. And it would have, under the same circumstances, probably have crashed right through just the same way that Luna did. Because at 65% loss, it would liquidate the same way, and Luna lost more than 65%. So then you have the Cardano people saying, see, this is why you go slow. And then that just gets all the other people riled up saying, Cardano, you're not slow, you're glacial. And you can't do this yet. So it's just been pretty brutal just watching everybody fight about everything in general. So I do have to say that's.
So we'll wrap this up here in just a second on this last topic. Okay. I'm going to ask you a quick question. For the next week, what's your outlook on the crypto market in general? Let's just talk about the overall markets.
I just said it. I think we're not done bleeding out. We're just not done bleeding out. I don't see anything. There isn't anything over the next day or two that is going to change the market, in my opinion. There's nothing that we can expect that's going to give us good news, that's going to spike us in the way that we need to on any of the markets, in my opinion. You might get a short term. The problem with crypto is different than regular markets. If you make it through a day, you live to live another day, so to speak.
Yeah, crypto trades all
night.
We're
down at 4, then at night it can drop down.
Yeah.
Great yesterday at looked like it was recovering yesterday at 4 o'clock, 5 o'clock, 6 o'clock, went straight to hell, and has continued to since. So but yeah, I don't see any strength in the market right now at all.
So for me, with the equity side, I believe that there's two dynamics that's going to come into play here. When the SPY and the Qs came down to the 200-day moving average. We knew for a fact that there was going to be buyers waiting for the bounce. Okay. The Qs bounced at the 200-day moving average almost to the penny and then broke through it within like a 3-minute period. As in, like, support got so destroyed so quickly, it actually led to a very fast flush, stops, panic selling, etc. SPY, I think the bounce lasted a little bit longer. It may have been a day. It may have just been like towards from the early point of the day, and then it broke at the end of the day or the following day. Similar reaction as well. I think we're coming to that kind of make or break moment in the markets. And it's really, the Qs are already in bear territory. They're already getting really crapped on left and right. The SPY was the one that really kind of reacted when it got barely into bear territory. We ended up bouncing from 385 to a high of 408 in basically 3.5, 4 sessions. And within just today, we basically came all the way back down to the closing price of the day that we bounced, right? Which was what is it, Wednesday, Tuesday, Monday. So that was what, last Wednesday, the 12th. Am I wrong? Yeah. That was last Thursday. So this is going to be extremely important because, I mean, we're giving away gains like that in one day where we're wiping out basically pretty strong rebounds. This is going to be what we are getting into, the potential capitulation moment. People have thrown the word capitulation in the stock market, and I'll tell you right now, you haven't seen capitulation yet. You have to trust me on that.
Are you looking at 285 or so as your
385 on the SPY, 385. The SPY, the Qs matter, but it's not as significant as the SPY in my opinion.
Okay.
I also want to point this out, and actually I want to share my screen here. I want to see if I can do this really quickly here. And I know some people are listening on like Spotify or whatever, or maybe Apple Podcast. This is predominantly for the people on YouTube. So we've seen a rally back off of a swing low like this and a gap down meltdown. And we've had that idea that it could hold that level. Well, it didn't hold that level, and it melted from 404 to 385 in a 3-day period. This just happened recently. So if you actually take it back and see what it did here and what the follow respect was, this was the up day and then the gap and go down day. Today was like basically open and just go only down. That's what happened here. It opened and only went down. That means the follow through is that we're going to see a test of that 385. A failure of hold on that level means that we're going to get a breakdown. But this breakdown that we've seen is going to be exasperated probably 2x, meaning it's probably going to be 2 times the move that we saw there, because we are now officially going to be accepted into bear territory. So that's where the capitulation idea comes in. And that's where I could see 350 coming very quickly by the end of this month. I'm hoping that 385 gets defended. And I'm hoping that respectfully that we don't, we don't break. I know a lot of people pump their chest. Oh, I'm short. I'm making a ton of money. Listen, there's people's pension. There's people that plan on retiring. My in-laws are retired, and like, I can't imagine how their portfolio looks over the last few months. I'm sure they're not like deep into like growth names. I'm sure they're into like certain assets, more staples, a little hedged out, but nonetheless, I don't want to look at my 401k. I don't want to cry. I know that where it's at right now, and I know that it's way below than where it was at the start of this year. So we're kind of at that in equities. I really hate to make or break, but this is where we're trying to root for the markets to kind of go up so that we don't see the ugly come in. So it doesn't take 3-4 years to make back what we're about to lose. I'd rather be able to hold and maintain. And I actually think that even if we get to 350, there is a slight chance that we're going to finish the market or finish by the end of the year plus minus only 2% versus 20% down. I'm hopeful for that, but that is highly dependent on what happens in Ukraine. That's highly dependent on if China gets off their tail and really stop locking everybody down. And it really does matter here in the United States that we kind of get the supply chain logistical issue really fixed up so that we have one less thing to worry about, with all the crap that's going on in the world right now. So we'll see. I don't know, in regards to everything else, obviously you're seeing a little bit more weakness. I just know that we're really close to that breaking point in the markets. And, once that goes, it actually may benefit crypto, to be honest with you. If we see capitulation here, people might be like, well, look, Bitcoin is calming down. Maybe we should play in a little bit of Bitcoin versus holding these stocks. Because once we start seeing stocks down, I don't know, 5% in a day, you don't think it can happen? Target's down 25% today.
Oh, yeah.
I mean, they had a reason to be down, but Costco didn't. Costco's down 12.5%. The ugly is not here yet, folks. So just be ready just in case. We'll have to see. 385 is the price level to watch. Folks, hope you enjoyed the podcast. If you do, we would be grateful and thankful if you could share with your friends, get the word out. Again, we're dealing with the legend Howard Greenberg, who surprisingly has not been wrong in any of the assessments that he broke down in our podcast. I may have been, but generally I'm on the correct side more times than not. We'll just have to wait and see. And if you like this information, again, get it out there, help promote us. We would love it. We would appreciate you all. Peace and love. Dips to rips, guys. We'll see you next week.
Thanks a lot, everybody.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.